Hello and welcome to AQA Accounting. In this session, I'll be going through a question on disposal. So this question, question number 11, is from the 7127 spec of accounting, AQA paper 2, June 2020. So we'll do a quick run through of the question and then make a start. So we've got Ming is a sole trader, year end 31st March 2020. And what they've mentioned is the asset was sold in 2019 for 7,000. It was originally purchased in July 17 for 16,000, 25% reducing balance method, time apportion basis. Okay, so for this question, I would probably do a disposal account and put everything in there, and that can be part of your workings for the question. Okay, so that could be a disposal T account. So before we actually start disposal, there are 4 steps to disposal. Number 1 is put the cost into the disposal account. Number 2 is put the depreciation, okay, into the T account. That's step 2. Step 3 is show the proceeds, meaning bank. Okay, show the proceeds. And step 4 is you balance it off, and that goes to the income statement. So there are 4 steps. Move the cost, move the depreciation, show the proceeds, how much you sold it for, and balance it off. Now, in terms of cost, we have the cost. We don't know what the depreciation is. The proceeds, we know we sold it for 7,000. So we have that. And then this is just a balancing figure. So we have, really, we've got 3 out of the 4. The depreciation is the challenge in the question. So what does it tell us? It tells us we bought it in July 2017. So we bought it in July 0717. That's when we bought it, 0717. We sold it November, which is month 11, 2019. Okay, and our year end is always March of that year. So if we bought it in July 17, what we need to look at is when is the next year end, our cutoff. So July, obviously, March is going to come after. So we've finished 2017, we start 2018, and we have 0318. So somewhere about there, okay. That's March 18. This is our year end. So this is when we, P, purchased it, S, sold. We purchased it, we sold it. We've had it for this duration. Now, we bought it July 17, year end is March 18. The next year end is probably over here somewhere, which is March 19. And then later in 2019, you sold it. So we basically have 1 year end, or 1 financial year. Then we have our 2nd financial year. Then we have our 3rd financial year. Now, the reason why we're doing this is because we need to sort of ascertain how long we've had it for, okay? Now, obviously, if you count from July to March, just use your fingers, okay? So July, August, September, October, November, December, January, February, and March you include. Okay, let's do that again. We include January because it's the 1st. July, August, September, October, November, December, January, February. We include March as well because year end is 31st of March we include. So that's 9 months we had it for over here. Okay. The 2nd year we had it for the whole 12 months, and here we had it from obviously end of March, meaning April. So April, May, June, July, August, September, October, and November. 3, 6, 7, 8. So 8 months. Okay. Now, in terms of the policy, we bought it for 16, so 16,000 times by 25% times by 9/12 because it's on a time apportion basis, meaning in that year you have to work out how many months you've had it for. That's where this comes in hand, okay? So if we do 16,000 times 0.25 times by 9/12, divided by 12 times by 9, that gives me approximately £3,000. This is year 1. Year 2, because it's reducing balance method, we do 16 take what we lost in the first year. That equals to 13 times by 25%. No need to do the division because it's a whole year. So 13,000 times 0.25 is 3250. That's what you lose in year 2. Cost minus depreciation, net book value, reducing balance method is done on the net book value. Obviously, in the first year, that's what it's worth. In the second year, it's not worth 16. We lost 3. We do it on the 13. Then year 3. So we do, obviously, now 13 minus what we lost, 3250. And that equals 13 minus 3250 equals 9750. Then we do 25% and we do times by 8 over 12. And that will give us 9750 times 0.25 divided by 12 times by 8, 1625. So we add the 3 figures, 367,875. This is the depreciation. Okay, step number 1, put the cost into the account. The cost is 16. This has come from the asset account, the non-current assets account. Step number 2, put the depreciation in, 7875. This is from the provision for depreciation account. Step number 3, write down how much you sold it for. So this is the bank figure. We sold it for 7,000. And then you balance it off. Now obviously that's higher than that. So we're going to do a total of 16, differences, 16 minus 7875 minus 7,000 equals 1125. This goes off to your income statement. Right, in terms of a summary of this question, okay? So they gave us the cost, they didn't give us the depreciation, we have to work it out. The proceeds, they told us, and the IS, we balance it off. Now, in terms of disposal, there are 4 steps you should know before doing this question. When you get rid of an asset, you get rid of the cost. You take it out of the cost account, credit, and you debit disposal. Any depreciation that the asset has accumulated, you have to remove it from the provision for depreciation account, which means you have to debit provision for depreciation, credit disposal. The third step is show the money coming in. Debit the bank, the money comes in, credit disposal. And the fourth step is a balancing figure. IS can be here or here. Now, in terms of disposal, step number 1, 2, 3 will always be 100% exactly the same on the same side. Always for disposal. 1, 2, 3 never ever changes in terms of double entry. Step number 4, IS could be here. If it's here, it is a profit. If it is here, if it is a loss. Let me show you as an example, okay? Just this box over here. Ask yourself, if you bought an asset for 16,000 and you lost, because you used it, you lost 7875. 16 minus 7875. Let's just get the light back on again. Okay, so we bought it for 16. We've lost 7875. According to us, it's worth 8125. We sold it for 7. We made a loss, 1125. Okay, so that's the 6 marker question done there. That's question 11, 7127, paper 2, June 2020. It's a straightforward disposal account. Where they're trying to catch you out really is this reducing balance method time apportioned. Normally they use that for straight line. So you could have done, I don't know, for example, 16 times by 0.25. If it was straight line, 16 times 0.25 divided by 12 times by that plus that plus that. That's straight line. You would do it on, I don't know, divided by 12 times by 29 months. But this is reducing balance method, not straight line. So you have to do 1 year at a time, and then put it in. So that's where probably most of the marks are awarded. There's probably 3 marks on that. 1, 1, 1. Okay, thank you for watching.